So starting December 15th, 2024, new mortgage rules are set to shake up the housing market, making it easier for buyers to get into a home with less money down. Sounds great, right? But hold on, just like most things in life, this looks good on the surface, but let's talk about what it means on a deeper level. Now, these changes won't just impact your buying power, they could reshape the entire market. The idea behind these new rules is to make it easier for people to enter the market. And yes, on the surface, it seems very helpful. But in my opinion, this is more like of a band-aid solution than it is a real fix. Policies like these that are geared towards affordability, whether directly or indirectly, really focus on stimulating demand, but they don't address the fact that we need more houses. The root issue isn't demand, it's supply. And if we focus on building more houses and making those more affordable, we'd see more meaningful long-term results. And this article right here, written by Global News, actually proves my point. And it reads, closing the housing gap would require a total of 3.1 million units to be completed by 2030, or an average of just over 400,000 units a year, and we are far from that, but that is a video for another day. Instead, these rules to the mortgage change could end up adding more fuel to an already tight market because we don't have a demand issue. Although it can certainly feel like we do with the sales being down, there is lots of plenty pent-up buyer demand. Now stick around because I'm going to break down exactly what these changes mean, how they affect you, and what to consider for if you're planning your next move in real estate. So before we dive in, if you're new here, my name is Alice Prince. I am a real estate broker with Royal LePage Signature here in the GTA, and I am passionate about helping you navigate this entire market with confidence. So if you'd like to book a time to connect, check out the link in the description below to schedule a call that is convenient for you. All right, so let's just jump right into it here. New mortgage policies are going to come into effect December 15th, and it's going to impact first-time homebuyers, allowing them to stretch out their amortization schedules from 25 to 30 years. Ultimately, this is going to reduce their monthly payments. Secondly, the minimum down payment thresholds are also changing. So for those with less than 20% down who are looking to making a purchase of a property over $1 million, you're going to want to tune in. So let's just start with a quick refresher of the current mortgage landscape when it comes to down payments, because I think there's a little bit of misconception here. A lot of people assume that the minimum down payment is 5%, and while that is partially true, it's not entirely the full picture. So here's how it actually breaks it down. So it's the first 5% on the first $500,000 of a home purchase, the next 10% on the portion between 501 and 99999, and then it's 20% on anything over $1 million. So let's just use an example here. So if you're buying a house at $800,000, your minimum down payment structure would look like this. It would be 5% on the first $500,000, which is $25,000. It would be 10% on the remaining $300,000, which is $30,000, and that's a total minimum down payment of $55,000. So that is your minimum down payment. Now this is going to change. It's going to be 5% on the first 500,000, which is the same, and then it's going to be 10% on the remaining 501,000 to 1.499999, and 20% anything over $1.5 million. Secondly, right now, for first-time home buyers putting less than 20% down, they can only go up to a 25-year amortization limit. But with the new rules coming into play, first-time homebuyers will be able to stretch their amortization from 25 to 30 years. So let's just put this into perspective. By extending the amortization from 25 to 30 years, first-time homebuyers will be able to find themselves with reduced monthly payments. And because those monthly payments are coming down, buyers could also gain up to 10% more purchasing power, allowing them to afford homes previously that might have been out of reach. And secondly, let's say that you're buying a $1 million house. Under the current rules, you would need to put down 20%, which is $200,000. But after December 15th, you would need to put down the minimum down payment, which is $75,000 as your down payment for the purchase of that $1 million home. Something that I find interesting all the time is, and it's very common for properties that are worth, that $1 million mark, trade or be sold at $999,999, because that $1 difference shifts the down payment rules, which opens the door for more buyers to afford the property. So these changes don't just benefit buyers, they also help sellers. Because with lower upfront costs, more buyers will have the opportunity to shop for homes, giving sellers access to a larger pool of potential buyers. And when there's more buyers in the market, well, we know what happens. We usually see competition, and when there's competition, prices will start to rise. For some buyers, this can mean finally being able to purchase a home in a neighborhood or home type that they previously were not able to purchase. Instead of settling for something that they didn't meet their criteria, they'll now have more options to find a home that actually fits their needs. As you can see here, all of this is screaming demand. And when demand increases, we have to ask ourselves, well, what happens next? And it's true that home prices are high and affordability is a mega challenge, especially here in the GTA. But here's the reality. Introducing policies that stimulate demand without addressing the actual issue, like supply, will not fix our affordability issue. We can argue all day long around this narrative that no one is buying homes and that they're more expensive. And I do totally agree that homes are very pricey right now. The reality is our affordability issue here in the GTA will not get fixed if we continue to create policies that are proposed to stimulate the demand side of equations without taking the other side of the equation, which is supply. With more people having the ability to enter the market and actually being able to afford the homes that they want and need for their growing families, we could see increased competition in certain price segments in specific areas, especially in that 1 million to 1.5 million range, where it's the average price in actually many areas across the GTA. But obviously, let's not forget that buyers still need to qualify for these mortgages, right? Income levels and pre-approval requirements remain the key factors. While stretching out amortization periods and reducing upfront costs, they obviously help. And for the buyers that do have sustainable income and financial stability to support these purchases, it's going to be interesting to see how this plays out in our marketplace. Something that I hear all the time is that no one is buying homes. You know, who can afford these high rates? Sellers are so desperate because they need the money and everybody's selling. I just want to be clear that that narrative doesn't reflect everybody's reality. There's many sellers that are sitting on substantial equity and are looking to make a move for various reasons, whether they're upgrading, downsizing, relocating, whatever the case may be. Maybe they're getting married, maybe they're getting divorced. And they're taking that money and they're keeping it in the real estate market. They're just kind of moving it around. And these sellers are not desperate. They simply need more buyers to come to the table to be able to sell. When buyers are limited, sellers can't sell, obviously. And when sellers can't sell, they obviously can't move. And it creates this really frustrating cycle where everyone tends to feel stuck. But with these new rules, buyers that have dual income households and sustainable employment will have the opportunity to buy homes that will suit their lifestyle. And sellers will benefit from a larger pool of buyers, making it easier for them to move forward with their plans. The market hasn't died, guys. It's a little bit slower, yes. Homes are still being bought and sold every day. And I talk to many people and I'm finding that not everyone selling is doing so out of financial hardship. Now, of course, there's going to be people out there who have investment properties and that need that cash and they need to sell. And of course, there's people who unfortunately are in a position where life has gotten very difficult. And I would be naive to think otherwise. But many sellers in this market are motivated by personal goals, not out of desperation. On a positive note, if you're looking in the market, there's finally housing options for buyers to choose from, which is something that we've so desperately wanted for so long, but people are nervous right now and rightfully so. You know, what's interesting is that in the last 4 buyers that I've helped recently have been first-time home buyers because now they can actually find homes that they're proud of buying, not junky houses, and they're actually being able to qualify and afford them while taking their time, being able to negotiate with the sellers and not having to compete against other buyers. Because a few years ago, that really wasn't the case. It was really tough for first-time homebuyers to be competing against 10 plus offers in a market where they'd be having to make firm offers, going into the offer blind, and competing against people that had higher pre-approvals, which ultimately drove prices higher and they were priced out. Anyways, that's just my 2 cents. So I want to know what it is that you guys think about these new rules. Are you excited about the increased affordability or are you worried about rising demand? Let me know in the comments section below. I would love to hear where your mindset is at with everything. And if you're planning to buy or sell in 2025, let's connect. My team and I are here to help you navigate these changes and make the most of the market. Use the link in the description below to book a time that is convenient for you. Until then, I will catch you on the next one. And please don't forget to like and subscribe. Ciao.